It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, January 5th, 2016. Boy, oh boy, we got another volatile session today. Another jam-packed newsletter. Lot to cover in tonight's video. Starting off with crude oil. We're bearish on the oil market here this evening. We got a spike in channel and a bearish wedge this evening, which tells us to look for selling opportunities after a bullish short-term correction higher coming off today's lows. We have inventories tomorrow, so we're going to get to this thing early before all bets are off around tomorrow's inventory report. So heads up on that. We'll get a plan for the oil traders tomorrow. E-mini S&P trading higher after a successful breakout pullback of a bullish triangle. We're going to learn more about trading triangles here in just a moment. This breakout pullback on the S&P tells us the bulls have short-term control back to range highs and possibly up to a measured move going into tomorrow's session. But once we get back to those highs, we're going to really be careful, stay patient to see if they can hold that pullback at those highs. The S&P traders right now are trying to regroup. The worst start since 1999. Yeah, that's a long time ago. Gold, the yellow metal, is trading sideways inside a bullish triangle, which tells us to look for opportunities to buy the lows of the range as well as buying the pullback after a successful triangle breakout. Get a little bit more time to wait on gold, kind of a lackluster session on gold. Not that big of a surprise, though, considering what's happening out there in this world of ours right now. We're going to plan for gold in a few moments here. How about the euro? The 6E, the euro futures, is bearish with a spike in channel. Up and down right now on the euro. That spike in channel on the euro tells us to look for selling opportunities after a bullish correction higher off today's lows. We have potential for a big reversal on the euro going into tomorrow's session, so I'm going to plan for that as well. As you guys know, we get planned for crude, E-mini S&P, gold, and the euro. Before we jump into our charts with our strategies for tomorrow, I do want to remind you guys to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, don't forget there's a link right in the description of the video on our YouTube page, and that'll take you right over here to sidewaysmarkets.com so you can follow along on our blog. A couple reasons why it's in your best interest to travel over here to Sideways Markets. First of all, upper left-hand corner, if you're not an advanced member of School of Trade, if you're not a part of our trade room and you'd like a free pass, Monday through Thursday, we open up our trade room for guests. Grab your free pass in the upper left-hand corner. Lower left-hand corner, you can join our nightly newsletter mailing list. Now, you'll never have to worry about missing another newsletter video ever again. All I need is your name, your email address, and then make sure you check your inbox because I'm going to send you a verification email. That way we know we have the right email address to keep sending you emails in the future. Right below the video tonight, you'll see a spot to download all the charts that you'll see me using in tonight's video. Nice and convenient for you guys. That way you have the charts ready for your own trading tomorrow. And then, of course, over on the right-hand side, you can register as a trial member and learn more about how we trade here at School of Trade, and of course, all the many benefits of our lifetime advanced members. And of course, you can learn more about membership information. You can always reach us 24/7, 365 if you have any questions or any help along the way. Don't forget, no question too big or too small for our live support desk. We've got qualified people standing by to answer all your questions. Let's jump right in. First of all, taking a look at tomorrow's news. Now, tomorrow for inventories, we got crude inventories tomorrow. If you're a crude trader, the big news for tomorrow is going to be that 10:30 a.m. inventory report. Now, don't forget, if you're trading crude tomorrow, we need to be very careful between 10:15 and about 10:40 a.m. Eastern Standard Time. And remember, everything after the news report comes out tomorrow morning is considered gambling, right? So be very, very careful. Tomorrow, and this goes for every Wednesday, of course, as long as we have inventories, it's early in, early out. The smart crude traders tomorrow will be trying to make all their money before 10 a.m. Eastern Time, because once we get after 10:15, we're sitting on hands. Inventories come out at 10:30. By the time the dust settles at 10:40, we're going into 11 o'clock, the amateur hour. Very important we get into those trades early in tomorrow's session. Overall, though, we have a pretty active session tomorrow, though. We have 8:15 ADP employment report. Don't forget, that's going to be a leading clue ahead of Friday's non-farm payrolls. We have a international trade number at 8:30, factory orders and ISM non-manufacturing at 10 o'clock. We talked about the petroleum status report at 10:30. And then we have the FOMC meeting minutes at 2 o'clock. Most likely those meeting minutes will be kind of swept under the rug because they will be referencing the FOMC meeting that, of course, notoriously rose, right? They decided to raise interest rates, right, at the end of last year. So difficult to tell if we're going to get much fireworks off this particular FOMC meeting minutes. I would imagine the best fireworks are going to come early in the session tomorrow as the ADP employment report leads the way into Friday's jobs report. And of course, we have the international trade number at 8:30, which of course is a big Red Star news event. So be on the lookout. Early in, early out tomorrow. That's the name of the game. Let's jump into our charts here and take a look at what the plan looks like. Starting off with the oil market. The black gold, the crude oil futures. Now, again, we do have that reminder. Tomorrow is inventory day. As long as Monday or Tuesday is not a holiday, every Wednesday at 10:30 a.m. And remember, we're sitting on hands from 10:15 to 10:40, and everything after the news comes out tomorrow, the inventory report, is really considered gambling. So be careful tomorrow. Tomorrow is not the time to be testing out new ideas after 10:30 a.m. Get to it early tomorrow morning. And of course, we'll be opening up our live trade room at 8 a.m. Eastern time and trading this live in real time. As you can see here, definitely a strong bearish market. We have a bear spike in channel here today. You know, really this, well, there are really three main components to this crude chart right now. First of all, I don't think this is going to be the most important factor on this, but we do have what feels like possibly a larger bear channel. I marked up the highs here, as you can see. And of course, with the bear channel, we're going to be looking for selling opportunities up around the high of that channel. And of course, taking our profit back down, right, at the low of that range. The second piece of this, which I think is going to be the most important piece, is going to be this bearish spike in channel. Now, if you follow the newsletter every evening, and remember, it's important that you watch every evening's newsletter because we build on them from day to day to day. Last night, we talked about these spike in channels. Today, we're going to talk about some triangles. Here's a spike in channel that we talked about in last night's newsletter. What do we know about a spike in channel? We know that a spike in channel is a strength pattern. It is a very big clue here right now. The bears are clearly in control, and we know that a spike in channel is going to lead to profit taking. That profit taking oftentimes confuses the counter trend buyers into thinking this is a new bullish trend, and so the best way to trade a spike in channel is to wait for price to rise higher and then look to fade the pullbacks, right? Look to fade that move higher by basically calling the bluff of the bulls and selling into failed pullbacks. Keep in mind, when it comes to a spike in channel, we can go all the way back up to the base of that channel, which puts us right around 3660, give or take a few ticks here and there, right? So don't be surprised here. This is the news candle from today, right? That inventory report. The API number, of course, 4:30 on Tuesday evening. That big green candle right there is a reaction from news. So again, expecting to see a bullish correction higher, and then we're going to be looking for those pullbacks to fail tomorrow. And remember, get to those trades early. The last component of this chart, we'll talk more about this in a moment on the next chart here for the S&P. But right now we have what we call a bearish wedge. And I'm going to lead into the next chart by talking about wedges and triangles so you can learn a little bit more with me here this evening. This is what you call a bearish wedge. Now, at first glance, what direction do you think that bear wedge tells me to trade in? If you said bearish, if you said to keep selling, that's a very, very intelligent guess, but it's wrong. A completed bearish wedge. And we talked about this last night on the newsletter regarding that inverted triangle. Remember the magic number of 3? 1, 2, 3, right? See that wedge now? 1, 2, 3. We expect to see a bullish reaction from a bearish wedge. So three components to this chart right now on the crude. I'm going to talk more about those wedges and triangles in, let's say, about 10, 15 seconds here. So we know that we've got the first one's going to be that major bear channel. I want to sell the high, right, and take my profit by the low to take profit. We also know we have this bearish spiking channel, which I think is the most important clue on this chart right now. That tells us to expect a correction, which may go as far as 36.60. How do you trade it? You buy, or should I say, you wait for the buyers to try to take those pullbacks, and you wait for pullbacks to fail, right? Catching those confused bulls on the wrong side of the market. And of course, last but not least is that bearish wedge, 3 pushes down, right? As crazy as it sounds, a bearish wedge after that third push down will generally spike higher. It is a bullish clue with a bearish wedge, which puts us right into that spot, right, to sell it back down again. The only real variable we have tomorrow is the inventory report. So again, head on a swivel tomorrow morning. Keep an eye on that time, because we know that tomorrow the time's going to really fly by here. Once we get past 10 o'clock, we're going to be really careful trading crude. Now, got a couple charts here. We're going to talk about triangles and wedges. Let's talk about this for a second. First of all, let's talk about triangles. Triangles are nothing more than symmetrical or balanced and sideways ranges. Wedges have a directional bias to them, right? And they have an inverted relationship, right, to the direction of that wedge. Let's start first with the triangle. A triangle is a balanced sideways pattern. And here's what we're going to do. We're going to look at that triangle, and we're going to try to get some sort of directional bias going into it. You're going to see both the S&P and gold have a bullish directional bias going into that triangle. Okay, so look left, and you'll see what direction did we go into that triangle. Very rarely do we see a completely unbiased or undirectional triangle. Now, when I say a balance and sideways, what I mean is it looks like it's just going sideways, right? What you're going to see in a moment are the wedges. The wedges have a definite direction to them. So here's how we're going to trade a triangle. First of all, use the directional bias. In this little illustration, we have a bullish directional bias. I have a couple different options. Ultimately, there are four important things that you want to remember about triangles. First of all, it's going to be the directional bias, right? Let's say, for example, we have a bullish directional bias. With that said, that's the first thing. The second thing is going to be when I have room. This is really important. Early on in the triangle, I can buy these lows. Take profit at the high, wait for it to go back down, right? Take profit, right? Buy the low again. Okay, that's number 2. So the first thing is look for a directional bias leading into the triangle. The second thing is going to be if you get a nice big fat and juicy triangle here, you can keep buying the low. Notice I said buying the low because of the directional bias. Now, here's the important part, the third piece. This is the piece that a lot of traders forget about. Once we get close to, let's say, the final 1/3 of this triangle, what's going to happen is it's going to get too narrow, and you're not going to be able to get a very good risk reward out of it. So once we start getting to that final 1/3, sit on those hands, and then we lead into, again, the reason why you want to sit on those hands is because we're expecting it to rattle around inside of that triangle. Now, if you happen to get a scenario where it breaks down and then you can basically fade that breakout, just be careful because you got to respect that trend line overhead as resistance. Then we have, of course, the 4 scenario. The 4 scenario is going to be the most reliable part of this triangle, and that's going to be the breakout. Now again, stay with the directional bias. Resist the temptation to trade against that directional bias going into that triangle, right? Capiche? Now, here's the important part. When we break out, do not buy that breakout. You never want to buy the highs, right? Remember the old rule? Buy low, don't buy high. So we have a breakout, wait for it to pull back, and then get a nice, strong, what we call signal candle. We need to see the bulls react as it pulls back. And what's going to happen is it's going to pull back like clockwork. They love to pull back right to the middle, right to that center point of that triangle. So remember, directional bias tells you which direction to trade in. You can buy the lows or sell the highs depending on the directional bias as long as you have enough room to go back and forth. Careful on that. Because the third piece of this is in the last 1/3 of that triangle, you're not going to have enough room. And because of that, you're going to see fewer people participating and it will get really, really slow. Your patience will pay off though, because the last piece of this puzzle, once we get down to that little tiny point at the end of the triangle, it'll like a jack in the box. Bam! And it breaks out. Don't buy the breakout. Buy the pullback, but wait for proof on the pullback because sometimes these fail. And if they do fail, they become very, very aggressive moves in the opposite direction. Why do you think? Because they're running stops of all the buyers who accumulated positions. Once those stops get run, you're going to see nothing but sell-offs there. That's your triangle. Now, a price wedge is very similar, but it's kind of the opposite. First of all, we can break this into both a bullish wedge and a bearish wedge. Now again, like I said earlier, they have an inverted correlation, right? They're inverted. So we get a bearish wedge and a bullish wedge. You can probably guess where we're going here with this, right? So price pulls up on a bullish wedge. Remember that magic number of 3. One, two, three, right? There's your bullish wedge. Now all you have to do is look for the next pullback to fail. Pullback fails, and we're off for the race to the downside. Okay, target will be back at the beginning of the spike up. I realize this is a little bit counterintuitive, right? Especially after we just learned about the triangle. Any guesses about what a bearish wedge does? Absolutely. Remember, the magic number is 3. Right? There's your bearish wedge. How am I going to trade this? Am I going to buy it? No, you could buy it, but that won't be as reliable as waiting for the sellers here to fail and buy right into their failure. That's going to be the most reliable way to trade that wedge. Now you know inverted relationships for those directional biased wedges. And of course, we have a balanced or sideways range for those triangles. Now that you guys are experts at triangles and wedges, now what do you see? Here we have a triangle on the S&P. See how it's not, there's no direction to it, right? It's just kind of going sideways here, right? Very, very clear. Now remember, we're going to look at the spike up leading into that triangle to give us the directional bias. As you can see here, price originally broke to the downside. Don't take the bait there. Wait for price to break out, pull back, and look at that beautiful signal we see right here. And that now leads into, there's your breakout pullback. So my money right now is on the buyers to get up to that 2017.07 on the S&P and potentially up to that measured move up there at 2021.14. Now, remember, this is a bullish bias to it. You draw a little trend line down here, right? So bottom line is we want to continue to find opportunities, buying pullbacks at support until we get up to that measured move extension. Now, once we get back to the measured move extension, this is where the buyers are going to have to flex their muscles. They're going to have to show that they mean business. Think of this as a trading range. We break out to the upside. If they can't hold that pullback, this is where the bears are going to be looking for a great selling opportunity into the stop losses of all the bulls. And if they can get short off those highs, targets will be back down at the range low, swing low from yesterday, and possibly making a run for that 1980, which was yesterday's low of day, all the way back down. Now, we know the plan here for that triangle. Where are they trying to go to? Move this around a little bit here. Yesterday's high, 2043 half, right? Yesterday's high, that's where these bulls are going to be targeting tomorrow. In fact, if you zoom out a little bit further, grab a measured move, you can see we're going to get about 2/3 of the way there on a measured move tomorrow. So as of right now, we have a bullish triangle, a successful breakout pullback. I'll be very, very surprised if we cannot make new highs either overnight or early tomorrow. What I need to wait patiently for tomorrow is if we do make that new high, can we hold the pullback? If we hold the pullback, they're running after that, I would say this range up here from 43.60, 43.5, right down to that 20.30 area to basically bring this market back to where it came from at the beginning of the year. This was the worst start to the S&P since 1999. That's a hell of a long time ago. And so we know they're going to be trying to reverse this. Now, I have to keep an eye on the failure here too, because with such bullishness that we saw coming out today, if this fails, we have to see that as a major failure. So keep an eye out for a test of the high, a failed pullback, wait for evidence of the buyers failing, and then those sellers are going to jump all over this. So it's going to be very, very interesting to see what happens in tomorrow's session. Right now, I've got to give the benefit of the doubt to the bulls, at least back to 2017, but then we're going to be watching to see, can they hold the next pullback? If they can't, we'll look for the price to collapse back to where it came from earlier today, possibly back to yesterday's low. If they do hold that pullback at new highs, well then of course we know they're going to be trying to get back up to where it came from and try to take back some of these losses. That was one of the worst starts in the history of the S&P. Now, how about the gold? The yellow metal is trading sideways inside of a bullish triangle, which tells us to look for opportunities to buy the lows of the range as well as buying the pullback after a successful triangle breakout. Now, if we look left, we can see the strong bullish move higher that led into this triangle. This tells us to look for buying opportunities. We learned this already. We want to buy the lows of the range, and when the triangle finishes, we can look to buy the breakout pullback as long as we have the correct signal candles, right? Now, you guys are experts on this, right? Now, keep in mind, if the bulls fail for any reason, we still have that unfilled gap from last weekend. I hate to keep beating a dead horse on this, but these things don't like to just hang open like this very long. Now remember, don't be fooled by the fact that it's an open gap. We know that most gaps get filled. The question is, when will they get filled? This is a wide open gap that I can't imagine people aren't seeing right now. It's also in an area of consolidation. So this 1061 is going to be a very tasty long-term target, which may not take that long at all if these bulls can't hold this price up right now. But as of right now, though, we have to err on the side of the bulls. We have a strong move higher into this bullish triangle. And now you can see exactly what I was talking about earlier, right? You can buy these lows as long as you have enough room for it. But now we're starting to get down to the nitty-gritty here as we get into that last 1/3. Again, I look at this like a jack-in-the-box, right? Winding this thing up, and then all of a sudden it's going to break out. There's definitely a bullish bias, so I will be very patient if it breaks to the downside. Break to the downside, look to catch sellers on the wrong side of the market, and then, of course, breakout pullback, just like we talked about earlier. Keep an eye on the measured moves. Keep an eye as we get closer to the end of this bullish biased triangle. And again, the closer we get, the more patient I have to become. I don't want to buy directly into the high of that trend line, right? So basically the scenario right now is if we go lower, I'm looking for sellers to try to sell that next retracement. If they're successful, to make a run at 1061. If they're unsuccessful, though, that's going to be a nice, easy buy, take some profit off at the trend line, and then try to hold a portion up to that measured move. As we finish off this triangle, we look for the breakout pullback. if that breakout pullback happens to fail, that's the catastrophic idea I'm talking about, right? With such a strong move higher, if the bulls can't keep it together, they're going to walk away from this, and this market's going to most likely be aggressively attacked here, trying to get that gap fill down at 1061, right, for all those traders who keep accumulating at these highs right now. Gold here, definitely get a plan for the yellow metal using that triangle. And then really another real simple chart here to finish up the session tonight. Here's the euro. The 6E, the euro futures contract is bearish. We get a spiking channel, which tells us to look for selling opportunities after a bullish correction higher off today's lows. The bears have clear control this evening, but 3 pushes down and a break higher tells us the bears are likely taking their profit and the bulls will have a chance to push it higher. Sellers will be looking to get short on failed pullbacks with a target back at the lows. Now, this euro has been on a tear. Look left for a moment here, and you can see it literally is pick one direction and it goes, right? Straight up, then straight down, then straight up, then straight down. I mean, literally, it's very, very straightforward once it picks a direction. But there's one thing I can't deny. Compare the size of the bullish moves to the size of the bearish moves. Look closely. What do you see? Do you see bigger bullish moves or do you see larger bearish moves? You might want to go see an optometrist on that if you can't tell which one this is, right? Definitely seeing much more significantly stronger bearish moves right now. It's really difficult to tell exactly why. The best part about being a technical trader is I don't care about the why. All I need to know right now is the bears are definitely in control right now. This is a spiking channel, and this is one of those very interesting spiking channels that have only a very small spike down and a really large channel. Now, what does that mean? Why is that important? Well, because remember, the spiking channel is a strength pattern that will oftentimes, we'll see, and again, remember the magic number of 3, 1, 2, 3. Sellers now take their profit. Price will jump higher here. And then this is where the bulls, they've got to hold pullbacks. If they can't hold the pullback, just like we talked about on crude yesterday evening, if they can't hold that pullback, those bears are going to jump all over them. And again, don't forget, if they hold the first pullback, this can go as high as 0817. We're going to keep waiting for those pullbacks to fail. The higher it goes, again, 0817 is as high up as it's likely to go here before these bulls really get anything, right, we're talking about here. Look for a measured move higher. I would love to see if we can get a nice A, B, C, D measured correction and then give us some buyer failure, right, coming off those highs. Again, buyer failure, look for pullbacks to fail. That allows me now to get both the sellers and the buyers getting short when we fail on those pullbacks. Guys and gals, nice easy plan for the euro. Looking for buyer failure as we correct off these lows. On the gold here for tonight. Staying patient on gold right now as we go into that last 1/3 of that symmetrical triangle with a bullish bias. On the S&P, talked about this in the S&P. They're trying to run this thing back up to erase that horrible start to 2016. As you can see, the bulls definitely have our attention right now, but watch out if they can't hold at the highs right now, because I do look at this through the lens of a trading range. And so, of course, if they can't hold that high, right, they'll be attacked and sold back to that low where, of course, buyers will look to buy the low once again as well. And, of course, on the crude oil, don't forget, early in, early out tomorrow, because tomorrow's inventory day on crude. Guys and gals, don't forget, we always have a plan. Every morning we open up our live trade room at 8 a.m. Eastern Standard Time with all of our advanced members here at School of Trade. I would love to trade with you live in real time tomorrow morning. Come out and join me as a brand new member. Again, Trade Room opens up at 8 a.m. Eastern Time. And don't forget, you can register for our trial membership on our website. You can learn more about our 3 levels of membership, whether you're brand new to day trading or you've been trying to get this to work correctly for the past few years and you still can't get the combination lock to crack open. Remember, being successful in day trading is just like being successful in anything else in this life. It's not enough to know the numbers. You've got to have the sequence of the numbers to open up that combination lock. And I look forward to sharing that with you every day here in our trade room as a member. I've always got someone standing by 24/7, 365 to give you guys a hand hand, and I look forward to seeing you next time. Same time, same place. I'm out of here for now. My name is Joseph. Be well out there. Be nice to each other, will ya? Adios, amigos. Bye-bye for now.